Well, good evening, ladies and gentlemen, and thank you for being with me this evening. It's good morning to our friends on the east coast of Australia, at least the northern part of it, in Queensland, the land of eternal sunshine, and the rest of Australia is on daylight saving, so they're an hour ahead of us. Anyway, good to have all of you here, folks. Would somebody just type into the question box that you can hear me all right? The volume's working. Yeah, we got it. Thank you, Victor. Victor, haven't seen you for a long time. Thank you for being with us. Alan, you as well. Haven't seen you for a while. Glad to have you guys. Yeah. Oh, Victor, of course it is. Me and Amy. I have a different name for him. Good to hear you go. I hope it's going really well for you. If not, let me know and we'll fix up any little issues you might be having. Thank you, folks. Let's have a look. Good. Here we are. Greg Palladini is with us, of course, from California. Greg's a master trader and wealth manager, and he had hoped to be on the show today to talk to you a bit about his experience learning about the Daniel Code and how he's applied that in his business and elsewhere. Unfortunately, he's got a bit of a bad throat. There's plenty of viral things were floating around, aren't they? And he's not with us today, but he may be with us next week. And next week, we're going to be doing our final tutorial before Christmas, which will be the 21st of December. And it'll be our typical end of year Daniel Code webinar. We'll be talking about all the wonderful things that happened to us during the year and what we can look forward to in the new year. So that's grand. And I hope Greg will be feeling better by then. Jim's with us in Hull. Good to have you with us, Jim. Justin, down in Hunter Valley. Give my regards to your dad. Keith's with us. Haven't seen you for a while, Keith. Good to have you with us. Leo up in the coal country of Canada. Leo sent me a couple of interesting charts that I'd like to share with you guys next week. It's a wonderful thing. He's becoming a very, very good analyst, is Leo. He's done his Daniel Code tutorial, and he's also got an interest in short-term trading. And Greg says he will be good to go next week. So don't miss our next webinar on the 21st, folks. Greg will be our special guest of honor. Partha is with us. He's a tutorial guy. I hope you're still feeling well, Partha. He had a bad trot of it. Peter Mack, who's not a day trader. Many other Peters as well. Todd is with us from California, Southern California. Glad to have you, mate. And Vicky, of course. Delighted to have you with us, Vicky. Okay, so I've called today's webinar Towards Enlightenment, and all year I've been talking to you about time cycles, about trading price, about the Daniel Code trade signals, lots and lots of other things as well. And recently, I've just introduced you to one of our algorithms, and it's pretty startling. And any of you that have been paying attention to them, you can certainly run into a whole lot of money, can't you? It's well and truly taken care of the Christmas shopping for the year and a fair bit left over. So that's grand. The expression enlightenment often is associated with a Taoist monk. My wife told me this. She's knowledgeable on all things ethereal as well as practical, of course. And it's a Taoist saying, before enlightenment, chopping wood and carrying water. After enlightenment, chopping wood and carrying water. Now, in case that didn't resonate with you, and it didn't resonate with me the first time, it simply means that while you achieve enlightenment, your normal obligations in life will go on just the same. A more mercenary approach would be after enlightenment, if you're trading, you'll certainly be able to pay someone to chop your wood and cart your water for you. But let's go on. That's the idea of this, because I wanted today to talk about the algorithms, and I also want to talk to you about the fourth and fifth seal. So as you know, folks, markets are rational, orderly, and sometimes predictable, and you would know that from looking at our trade results this week. It's really been enormous. But I want to offer praise for the fourth seal. Now, not many of you actually know about it because you're not subscribed to it, but it's a methodology of forecasting future price direction. It can be called the fourth seal, which is what I call it, or the fourth degree. The first degree is price, the second degree is time, the third degree is volume, which used to be an important indicator for traders, no longer is because the marketplaces are so fractured at the moment and have been for years, and the powers that be seem to be quite happy with that. Always keep your big clients happy is the motto, isn't it? So anyway, that's how the fourth seal starts. A more evolved version of that will also show you the major time cycles, and that's very important because I'm praising today Frank DB. His real name is Frank de Beyer. He's a young Belgian gentleman. He's a farmer. He's inherited the family farm in Belgium, and in 2011 I was teaching the basic rules of the fourth seal, and it was the first time I taught it, and this was in a beautiful, beautiful place where we used to live called Taupo in New Zealand. Right in the center of the North Island, and it's absolutely magnificent. There's a big lake there. It's a collapsed volcanic cone. It's 1,000 foot deep, and it's all absolutely pure, fresh water because it comes from the snow melt. It's just nestled in below the snowfields near Taupo. So the forecasting methodology combines time and price and became what I call moonbeams. And those of you who've been with us and attend all of these webinars, as for example, there's Mark L. I was worried she hadn't seen you come in, mate. I thought we're not going to have a webinar without Mark, are we? That doesn't seem remotely possible. So it's good to have you here, my friend, and a lot of interest. Your interview, I can assure you, and most grateful to you. So those of you who've been with us for a while will know what I mean by moonbeams. It's basically a fourth seal line that can start from the high before the high or the low before the low and goes through the open or high or low or close of a colored bar. And the colored bars are inside bars and outside bars. And they're very important, not for trading. We teach them to treat them as a null or a void for trading purposes, but for analysis, they are signposts to future market moves. And at that tutorial in 2011, I met Frank DB. He was he's young now, he was very young then. And he came to Taupo and he had his fiancée, Anne, with him. They're now married and at least 2 children that I know of. And he said to me, I've never seen a financial chart. I've never read a financial paper. But I like your writing so much. I used to write a lot for Financial Sense back in the day. He said, I like your writing so much, I'd like you to teach me this wonderful thing, the Danielcode. And that was the very first year that I'd ever taught the fourth seal. And I don't teach it very often now. This is Lake Taupo for your interest, folks. And when I tell you that was taken from my front veranda, I would only be exaggerating a little bit. I had a lovely old house there right on the lake, exactly on the lake. You can see those very characteristic New Zealand ferns in the foreground and the mountains and the snowfields at the back. Beautiful place. We lived there. We went over for 3 months and we literally spent 13 years there. And that's pretty much what the front of my property was like. A beautiful sandy bottom, clear water, and wonderful, wonderful trout. And I'm not sure if my friend from Redding, California is here. But for those of you who are in that part of the world, as you know, Redding have the best trout. And over the years, this was many years ago, they were trying to get other populations formed, but based on the Redding trout. And that's how Taupo got its trout, which are now as good as any you'll find anywhere in the world. They're absolutely magnificent fish, and they're all bred from the stock that came over in a number of giant milk pails from Redding, California. So if you go to Taupo, don't miss out on the lake. It's everything. It's beautiful. And very conducive to thinking about your trading too, for most things. So, so this is a story about the enlightenment of Frank D.B. in particular, and I hope of all of you. I hope that over the year we've talked at least 25 times, maybe more, and I hope that little by little, things I talk about seep into your consciousness and help you towards enlightenment. The fourth seal or fourth degree, as I said, it starts from a high before the high or a low before the low, and it goes through the open, high, low, close of any coloured bar, and it's quite extraordinary. The fifth seal, the fifth degree, if you like, starts from the same place, a high before the high or a low before the low, and it goes through a verified swing high or swing low. So how is it verified? It's verified because the point of it will itself be a moonbeam. That might sound a little bit too esoteric, but you'll see it as we go along. So the wonderful thing that Frank has accomplished is that at the 2022 high, you remember he was looking for a high. We were all looking for a high, and the high came in, and Frank was adamant that's not the final high. That can't be the final high in the S&P. There will be a correction, and a new all-time high will follow, because the ratios at that 2022 high are not the ratios that are associated with a terminal high or low in these equity markets. If you want to understand more of that, have a read of that article that I've got there for you. That's the front page. It's called The Other Way, The Greatest Story Never Told, and it's posted under the Articles tab at our website, www.thedanielcode.com, and that will tell you all about major time cycles. If you're really interested in how time controls markets, read that. It runs back a long time. It's not just designed for the recent numbers, and it will show you typically how important highs and lows come into markets. So just so you can understand a little bit about what I'm talking about, this is a moonbeam. A moonbeam, here we are. It started from a high before the high, you can see that, and it's run down, and it's gone through the low of two outside bars, what we call coloured bars. It's then continued on further down, and it's gone through the open of a coloured bar, the open and close actually on that spot, and eventually that's given you the October 13, 2022 low, which was a strange one. It was due a couple of days earlier, and then there was an options expiration, which saw that big dive down and reversal, and that was the low. Speaking about OPEX, there's a massive options expiration, particularly in the SPY tomorrow, I should say, Friday. So expect some huge volatility in markets. So a moonbeam is essentially a fourth seal line that has the additional characteristic that it passes through another colored bar, either an inside bar or an outside bar. And you can see after this line here, this angle which started from a high before the high and went through a swing low, a coloured bar, and before that an outside bar, a grey bar, and then goes through the body of another couple further on. That's what makes it a moonbeam. And wherever you find moonbeams, those are important points for your timing charts. And what Frank has been doing over the years, for you that don't know, he does the fourth seal charts and commentary for us. And in 2011, as I say, that was the first year I actually taught the fourth seal. And Frank really took it to heart and went away from that tutorial with the impression of the fourth seal ringing in his ears. And he then spent many years just working, finding the initial starting point for these charts. Once you've found them, they'll just repeat again and again and again. And got to the stage that he was so good that I was happy for him to come on board as our time fourth seal analyst and commentator, which he's done for us for a number of years. And if you haven't already, you should get subscribed to the fourth seal. He does 3 markets: S&P, gold, and crude oil. And it's been quite sensational, the S&P and gold. How many people got that big blow off top in gold? We did, and we got it well before it was even there. You'll see that as we go through. So that's what makes a moonbeam. When you get enough of those, you can start running your charts and plotting. So this here is this is the S&P E-mini, and this is a fourth seal line from believe it or not, it's a high before a high, that little up bar. It's a higher bar because it has a low either side. That makes it a high, and it's also a high before the bigger highs that come after it. That defines it's a high before the high. It goes through the high of an inside bar and almost takes out the close of the next outside bar, but it does find the top of that little minor swing that makes it a fourth seal and a fifth seal line, and that got the high in January 2022 pretty much perfectly. It got what looked like the few highs for a few days beforehand, then a little 2-bar correction, up she went, and it got the final high as well. Shows you how incredible these things are. And below it, there's another fourth seal angle that goes through the high of an outside bar, the grey bar, which incidentally also makes it a fifth seal line as well and gives you that high. So why am I showing you this? Well, to do the time analysis that Frank does, he's got to start from finding these fourth and fifth seal lines, which are terribly important. Have a look at this. It's gold at its 2009 high. Gold is one of the markets that really loves the fourth seal and the fifth seal. Shasta Lake, just north of Reading. Oh, that's from Greg. Yeah. Is that where they came from? Well, isn't it, eh? How wonderful. Beautiful place. I loved it. Reading. I went there and did a tutorial many years ago. Okay. And that's, of course, Greg, where all the towboat trout were bred from, Finkelings from California. So have a look at this. Gold really, really loves the fourth and the fifth seal because it's so precise in its bifurcation. It's quite marvelous. And you can see there's a fourth seal angle I've shown you there. That starts from a low before the low, and it runs up and it goes through the open of that little inside bar, and then it goes through the low of the red inside bar from the second high, and it just runs right up, and it forecasts very, very accurately the 2009 high, which is on the chart. Now, once we've got that, we can say that that's a very important high, because it's been found by a moonbeam, and as well as that, we can put a fifth seal angle on those that line that takes us into the 2009 high. Have a look at this. That's the same chart you just saw, with the fifth seal angle running into the 2009 high. And if you leave it there forever, look what happens. It goes on and on and on. And in September 2011, it finds what was then the all-time high in gold on the futures chart. Exactly. Pretty amazing, isn't it? It didn't get offset by the bars, 2 bars before. Remember, these are six-day charts. Every single bar is comprised of 6 trading days. It didn't get upset. It found the high, but not exactly of the little high before it, 2 weeks before it. But then it found the high pretty much exactly. And there's a lovely story about that. This was going on at the time in Taupo, New Zealand, at a tutorial, and Jeff was with us. I don't think he's with us anymore. He was a long-time member. And during the tutorial, the webinar tutorial was correct, excuse me, he got up and ran out of the room, and then we didn't see him until that evening after we've finished our teaching for the day. We go and have a drink and something to eat together. And Greg came back in and was standing there looking all flushed in the face. And I said, "Are you all right?" He said, "Yes, I am. Why?" I said, "Well, I thought you must have been sick. You ran out of the room like all the denizens of hell were after you. I thought you might have had really been feeling ill about something." "Oh, no," he said, "no." He said, I saw the fourth seal just picked up that high in, this was 2011, of course, the same tutorial where Frank DB was. And he said, I had to go and sell all my gold bullion. I said, "Crikey, do you have a lot?" He said, "Yeah, I do. It's worth a lot more than my house, which is major asset." So I didn't just take the time at the moment to tell him that these things are of the moment, of the instant, and they can reverse just as quickly as you know. But it was a wonderful thing. And for many, many years after that, Jeff used to send me a nice presentation package of Californian wines, which always went down particularly well on Christmas Eve. So that's how strong this thing is and how amazing it is. And this is what happened at the all-time high we've just had, and on the 4th. And you can see you've got 3 fourth seal lines there. One of them is also a fifth seal line. And they've marked that top with what we would call a cocked hat. Those of you who've done any offshore or ocean navigating will know what I mean by a cocked hat, when you can get 3 lines intersecting. They leave a little space between them that looks like a triangle. Then the smaller that space is, the more accurate your plotting is. So that was what happened at our recent high. But more from that. So this is Frank's commentary on gold. He does this every week, and interesting what he says. It doesn't mean that long term there's a new bull market for gold, but there was no topping cycle on the 24-day chart, and I suspect gold will confirm its breakout in the near future. The daily DC signals will lead as well. You all know how that trade went, and it was pretty fantastic, wasn't it? So this is our new 6-day chart that I've talked to you about a little bit recently. This is being done for subscribers to the Danielcode website Super package, and this is one of the 6-day charts which we're doing for crude oil, S&P, gold, and UST bonds. And this was this was some time ago. I haven't got the down. This is not the recent one. And what it's showing you is almost perfect target recognition at the 207,150. If you go up a bit and you'll come to the number, which is 2152.7, you can see that right near the top of the chart. And that number has been on there for months, but it wasn't even within viewing range until I think it was week before last, not last weekend, the previous weekend. That's when this chart was done. But you can see that 2152.7 sitting there on that chart. Mr. Palladini is one of the people who gets that chart, so that'd be interesting. And this is the next stage of it. You can still see that 2152.7 sitting there. And here's what happened. Look at this. This was this absolute magic blow off top that we got. And look where it went to. 2152.7. That was the blue Daniel code number on the 6-day chart. How can 6-day charts be as accurate as daily charts? Well, they just are. I guess that's the answer to it. Here we are. I can tell you exactly what that high was. The blue line was at 2152.7. The actual high was 2152.3. 4 tick variance, a huge momentum move, massive gap and run. Nothing random about it, was there? Hit the Daniel code blue line. That was it. That's all they wrote. Turned around and has been battling along since then. And that, of course, if you were subscribed to the members' 6-day charts, you would have seen that at least a week before that event happened. And this is a chart I put out just to clarify exactly what I'm talking about. And I've put a circle or an oval around that 2152.7 number that has been on all of those 6-day charts. Pretty good stuff. Okay, so here we are. The Enlightenment of Frank DB. This still is gold, and I'm showing you where that big high came in gold. This is Frank's 6-day chart. He also does 12-day charts and 24-day charts, and he had that big 59 cycle sitting right exactly where this big blow off top went to. I mean, it's a beautiful thing to see when it's happened. It's an even more beautiful thing if you see it while it's happening and the numbers are on your chart in front of you. That really is something to get excited about. I've told you most of this. He started our 2011 tutorial, and later he became our analyst and commentator, not FUR with the U, it should be FOR. And interesting, soon after the all-time high in the S&P, as it was then, well, it still is actually in January 2022. S&P hasn't taken out the all-time high. Dow has. But Frank was saying this is not the final high. And the Daniel code cycles at January are not the cycles we see at final highs. And there must be a higher high still to come. And, you know, I was pretty susceptible about that, I've got to admit. I didn't have a whole lot of faith in that prediction. I thought the market was horribly overbought, and it was desperately in need of a serious correction, which we haven't had. We've had a very minor correction so far. It simply corrected 50% of the last major swing, which was the COVID flash crash swing. You know, in that conversation, he said to me, I've learned a lot over the past number of years just from doing these charts, doing these commentaries every week, looking at these charts all the time. He said, I've learned a lot. You should trust me. So I said, okay, I do. And that caused a lot of bad feeling at the time. A number of our clients who were guys waiting to pounce all over an option strategy were a bit upset about it. But anyway, that was Frank's call, and I backed him with the call. And the reality is, he's the only analyst who declared that the January 2022 high was not and could not be the final high in the US equity indices. Boy, if you think that's gutsy now, think of how gutsy it had to be somewhere near the low a number of months ago. incredible. Frank's determination that the expected high did not come on a cycle that traditionally supported terminal highs and terminal lows. Pretty extraordinary, I thought. This is a 6-day chart of the S&P E-mini, and you can see there's a black line on it at 466,425, as there was then, and this is the 5-day chart again, and you can see that that black line there is pretty important, because the Danielcode black line is the last level of support or resistance for any market, and it has that additional quality that if we were to get a daily close above that line, you can see this was some time ago when this was created, it was at 466,425, then a daily close above that would put the probabilities massively in favor of an new all-time high. And we're talking about 92 to 94% in the probabilities. So we've had one of them in the Dow already. NASDAQ will do its thing, but I think the S&P probably is overdue for a little correction, and then it still has time for the rest of the Santa rally up to make new highs in this market. Anyway, follow the Danielcode daily signals. They will certainly show you the way. So trading the Danielcode time cycles, creating them and trading them, that is the best trading system I know. And that's certainly borne out by a whole lot of you who have done the Danielcode trading course, which is still going on instantly through December. And if you're thinking of doing a tutorial, I do suggest that you do it this month. I'll be working through the whole of December, except for a few days around Christmas. And there are some slots in there available for the Danielcode tutorial. And why would you do it this month? Well, we do have to seriously consider putting the price up next year. The tutorial, which presently costs $7,500 US, has been at that price since I started teaching it in about 2003, 2004. So we've had the best part of 20 years without a price rise, and there's no doubt that inflation, which Mr. Biden insists is not there, it's had a real effect on the cost of everything. And you do need to keep your pricing up to date, and you shouldn't be as relaxed about it as I have been. Let's have a look at these wonderful, wonderful algorithms. I've got 3 of them. I've only shown you one so far. I think it's the best one. And it's the Danielcode #1 algorithm, which I created in 2018. And I actually created it to overcome this 1-bar counter trend issue that is so annoying. To me, at least, it's annoying. You can see there's one of them here. This particular module didn't pick up that trade. I say that without looking exactly at the chart, so if I'm wrong, forgive me. But that was its main purpose. And of course, it's going on to do lots of other things as well. We've had many years looking at this, and I've seen some quite amazing things with it. At the moment, we're pumping these out to you free, and Terry is working to find some slots in the Danielcode website where we can store them for you on a permanent basis. But at the moment, they're all together in one document. You can just click on the link that says Danielcode Algos at our website, and they'll all come up. I haven't updated them for today, folks, as you can understand. I started at 3 o'clock getting ready for this webinar with you, and I've done the daily signals, but I haven't got around to updating the algo charts yet, which I will do in a few hours, I'm sure. That's gone backwards and it should have gone forwards. Here is forward. This is the Dow with the front month of the algo. Have a look at this for an extraordinary piece of trading. I'm not suggesting that you're going to see anything like this too often, but this is the best part of a $19,000 trade per one contract on the mini Dow. Massive money. And wonderfully exciting things. I'm going to talk a bit more about these algos because you need to learn how to trade them. This is the NASDAQ. This is the front month of the algo, and it's had a big run up into the day as well. And this is CAD, Chief Canadian Dollar, Swiss franc Forex pair. It works exactly the same on Forex as it does on futures. So you Forex guys, I asked you some time ago to let me know which markets you were interested in futures and Forex, and a number of you took the time to write to me. Leo, you were one of them, and I thank you. So was David, so was Rolf, a couple of others as well. Let me know which of the Forex pairs you're most interested in so I can make an algo for those pairs available to you. It's the same algorithm, it just works on all charts. And as you can see, when there's a bit of volatility in the market, it's pretty sensational. Now, thinking about managing it, first of all, think Flip Me. Okay, those of you who don't know Flip Me, go back through some of the previous Danielcode webinars when I've talked about it. The basis of it is that every market turn that happens on a Danielcode time or price signal also has a stop loss that goes with it. There are no orders without stop loss equivalent. And the Danielcode time and price orders are so powerful that a failure, in other words, if it takes out that preventative stop, that's a signal that you're wrong and you need to do something about it. And what you need to do about it is change your position. If you were short, get long. If you were long, get short. That's Flip Me, and it happens precisely at that number where the market says there was a signal and there is now a failure. So you guys who've done tutorials will be well aware of that, I know. Okay, so think Flip Me. Think also that this market doesn't exactly work on swing highs and swing lows as well as we expect it to. So often you'll get, and you can see a couple of them here, you get a false high and a couple of bars later it's taken out again. And you need to be thinking a lot about what is your risk management. This is wonderful stuff to trade as long as you've got your risk management in hand. And if you haven't already, I suggest you start thinking about average true range. Take the average true range for all of your markets. Trade Navigator or any other charting program has a tool that measures true range. Make sure it's true range, not ordinary range, because you have to account for gaps on market pricing. And then the default is usually 7 days for the average true range. That's too fast in my opinion. You're just reacting to whatever emotions are driving the market at the time. And we do want to respond to those emotions, but we don't want to be reactive. In other words, I use a 29-day average true range. Over the years I've used excuse me, I've got a bit of Greg's throat problem. Over the years I've used 44, 59, even out to 255, which is 1 year. Obviously much too slow. But I've settled now on a 29-day average true range, and that's pretty good. That's responding, but it's not just reacting madly. And however you're thinking of trading, if you're going to be trading these algorithms, which you should, there's a whole lot of money there, you should be thinking in terms of your risk rarely being greater than 1 ATR, 1 average true range in dollars, and never greater than 1.5 ATR. That's the rule I use. It's proved a pretty sensible rule over a long period of time. But make sure you understand your risk management perfectly. If you've done a tutorial, there's no problem for you guys, because if you're stopped out, you know to get back in. But not everyone knows that. So something to think about. These algorithms are immensely powerful and immensely profitable. I don't know if I've got a chart here for you of the rundown in natural gas, but boy, it has been absolutely sensational. One of the things to think about when you're thinking of trading the algorithm, this is a 24-day chart, which is, if you like, this is the Danielcode monthly chart, if you like. There are actually 22 trading days in most months. This is a 24-day chart. And the most important feature of it, apart from the fact that the COVID flash crash and its correction before that, they were so important. The most important feature of it is that there's not a lot of changing period to period. In other words, once this thing's locked into a signal on the blue, meaning it's going up, it's a buy, each month the highest probability, and I mean, there are so many unknowns that go into market forecasting that the closest thing we can equate it to is forecasting weather patterns, where they're correcting thousands and thousands of data points all over the continent and putting them into a model to forecast the probabilities. And the probabilities for all weather are actually fairly simple, because the highest probability of what tomorrow's weather will be like is the same as today's weather. That's the high probability statistically. And that's the same thing with these algos. When you get out on a big time frame, if it was on blue this month, the greatest probability is it'll be on blue next month. If it was on red this month, the greatest probability will be on red that month. So you can take that as a bit of a interesting approach to say, whatever is the bias of the algorithm, I'm only going to take trades with that algorithm in that direction for the next month. Now, that's nowhere near the best method of trading your algorithms. The basic way of trading them is that you have a setup bar, and you have, just make sure you can see this as you can, and a setup bar is the first bar that is on a color change. Now, this is not as fast as trading time. All of you guys who are done Danielcode tutorials, you will be getting in before the setup bar. But what I've done is I've traded off a little bit of time to gain a whole lot of stability. It's a different way of looking at markets. It's still massively, massively profitable. You don't have to squeeze out the last bar. But you can see the first change of colors. It's running on blue. And they're blue and blue and blue as a background. Then all of a sudden it goes to the pink. Red should be red, pink. And that's and that is the first change in the color. Some honey in hot water is very, very good for you, Greg. Okay, so the first color change becomes the new setup bar, and if that bar is taken out in the change, the direction of the new color change, that's your confirmation bar, and that's where you should be, long or short as the case might be. Move on to the second grouping of them, which you can see. I've got a note on it saying change setup bar, and then you get two higher bars. If you get any bar that takes out a low, that has triggered the whole algo. There's a little bit more risk doing it that way. If you're super conservative, which is always a good thing, you would wait until the low of the setup bar is taken out to get short. And the same thing going long. You get the change setup bar, and then you get your confirmation bar, and as it takes out the high, in this case, in the blue paneling, that's where you should be long. Now, Greg's done a lot of work, Greg Palladini, our friend, who's been so kind to all of the Danielcode members. Greg's done a lot of work on these algos and had a big think about them. And I know he's got some ideas that he would like to share with you at our webinar next week. So don't miss that. You'll be able to ask Greg questions. For background, if you're not aware what I'm talking about, go to the Danielcode forum, and under forum, look for the link that says Danielcode training or Danielcode trading, something like that. And what I'm talking about is that Greg did his first Danielcode tutorial, I think in 2016, from memory, and then came back 2 years ago or so, and did another tutorial just to learn how to trade Danielcode Time. And he's a deep expert at it. By the by, Greg used to be predominantly a Forex trader. And after he'd done his second Danielcode tutorial, he got chewing into futures, which is very, very good. So if you read that, that's Greg's story. He was kind enough to share that experience with everyone at the Danielcode. And it's wonderful for people who are new to trading or interested in a professional view of markets, that Greg was prepared to share all that with you. So I'm always very, very grateful to him. Have a look at this chart in front of you. This is a polarity switch chart, and this is copper. And inside the algorithm is a tool that, for the want of a better word, I call a polarity switch. And it's basically switching from a positive impulse into a negative impulse, or from a negative impulse into a positive impulse. And it's not happening all the time when you would like to have it. So it's not on its own a standalone solution to everything, but it is another view of looking at markets. And it's quite uncanny how often these polarity switches are happening near important highs and lows. This is just one example. This is copper. I will get some other examples before our next session, because I think if you did nothing else but be aware of these polarity switches, you'd have some very, very good trading, wouldn't you? So if we can take this as a tool to add to our arsenal that we already have of other tools, this is just going to make things better and better and better. So if you're interested in taking the Danielcode trading tutorial, folks, email me, please, jneedham@thedanielcode.com. There are dates available through the whole of December. I will be taking off the holy days around Christmas, but that's about 3 or 4, that's all. The rest of the time I'm available, and would be important if you're thinking of doing a tutorial, get on and do it in December while we have some time available. It gets pretty hectic in the new year. This is Nirvana. This is how your time trading should look. One of our friends, a Swiss gentleman, I can't just remember his name at the moment, he actually went through this chart and analyzed every single trade that I've shown on the chart. And I think he came up with, I'm going from memory, with something like 12 wins and 2 losers, which are shown on the chart anyway. But he was pretty impressed with the dollars that it generated. And if you learn to trade Danielcode Time, you will be equally impressed, I can assure you. It is the most amazing trading method I've ever seen or heard of. And we do have a number of professionals like Greg and the other Greg, who are both wealth managers professionally, that they are saying the same thing. In fact, Greg Palladini has gone so far as to say you should stop thinking of futures simply as a hedging tool, which is how most of the big investors and the big stocks holders think of it. And he said the probabilities are that you should be trading it as a standalone income earning product. And that, from a person steeped in the culture of the American stock market, is a massive, massive statement, I do assure you. I'm showing you this chart again, if you haven't already seen it. This is a 29-day time cycle running through gold for the last 2 years and 8 months. I don't think it's quite up to date, but it pretty nearly is, and you can see that on the slow cycle, the 29-day cycle, and 29 incidentally is Danielcode definition of time, 29.6 is Danielcode time, running a 29-day cycle through this chart, the very least that we can say is that every important high and every important low has come in at the expiration of a Danielcode 29-day time cycle. And it's quite amazing. I certainly have clients who get as far as learning how to create this while they're doing their Danielcode tutorial. Cedric's one of us. He probably watched this later. He's over in Switzerland. And they say, don't tell me anything else. I don't want to know anything else. That's it. This is it. This is everything I ever want to know about trading in my whole life. And he works for the Swiss Central Bank. A very, very smart guy. He's a math major and loves Danielcode trading. Okay, so I think we're getting near the end of it now, folks. Take this tutorial now, and I thought this might interest you. Mark L was with us a couple of weeks ago and showed us how he made 1,000% on margin trading natural gas in calendar 2016. That's paper trading. However, if after you've done a Danielcode tutorial, you can't match those returns within 10%, I'll give you your money back. Now, paper trading has its limitations, but as Mark says, if you do it properly and you're not cheating, because you're only fooling yourself if you're cheating, if you do it properly, it's the closest thing to live trading. Trade Navigator has a link in their program where you can go to any date in any market and it will just show you up to that date. It won't show you tomorrow. And if you can use that for your paper trading, as Mark did, the results were amazing. And to get them, you need to learn the Danielcode time trading rules. So the only way you can learn that is at a Danielcode tutorial. And as I say, we have slots available right through December. Send me an email, jneedham@thedanielcode.com, if you're interested, and we'll get you scheduled to get started as soon as possible. If you haven't already, folks, you're most welcome to take a free trial. For some of you, you've been away for a while, and when you try to have a free trial, the computer will remember you, and it won't want to give you another free trial. So if you're in that position, just contact Terry at support@thedanielcode.com. And he will fix you up for your free trial. There's a whole lot on the Danielcode website that you need to see, read, learn, and profit from. And finally, this is our disclaimer. Do take it seriously. If you don't know how to trade, you're going to lose your money, all of it, very quickly. The good news is that if you do know how to trade, you can make a whole lot of money very quickly. But learn to trade. Don't risk real money until you are confident that you are a more than respectable trader. And if that's so, you'll continue to have that wonderful life. So that's it for today, folks. I'm not going to say Happy Christmas, etc., because we're going to be talking to you next week. And I will certainly very much enjoy seeing you then. Terry, you've been away for a long time, Terry Roberts. You've been a good client over the years. We missed you. Look at all these people who came in late. Oh, Michael. Michael, who should be in Turkey, but he's up in Switzerland for his family reunion over Christmas, as a lot of people are. So anyway, here we are. Great having you with us today, as always, folks. And Akshay, you too, my friend, as always. Any questions, please email me, janeedham@thedanielcode.com. If there's any subject or topic you particularly like me to talk about next week, please email me and let me know what you're interested in, and I'll have something prepared to talk about then. In the meantime, enjoy Friday. Make sure your stops are on. There's a massive OPEX. Probabilities are that you're going to get a fair bit of volatility, as you often do. So enjoy the ride. If you're with Danielcode, of course, you know that you'll always be on the right side of the market. And until next week, thank you, my friends, and I'll look forward to meeting with you again then. So goodbye for now.